Hello, you beautiful souls out there. Charts and news, December 29th. This will be, I believe, the second last episode before the new year because tomorrow will be Friday, which is exciting. We're going to see how the market reacts in the new year, but we can only make predictions based on charts. Yesterday was a big red day, and the media is going to have you believe that it's because China's COVID is getting so much worse. The virus and everyone's scared. Guys, that's not the reason, okay? The markets, if they're going to sell off, they're going to sell off, okay? It's charts. It's human emotion. News doesn't predict things within one day. But anyhow, I mean, honestly, do people really think that, whatever. Okay, guys, let's go, okay? SPY has made another bear flag. So we had the rising wedge, which are these two blue lines, broke out of that now. It's making a bear flag. It's chopping around this range. People are also scared now. Guys, December 22nd, SPX was a lot lower. And I want you to note where it rejected at. If you can see up there on the top left, it says L 37.64 and 49 cents. Keep that number in mind. I'm going to show you why. And there's a reason it rejected right there. However, if today or even tomorrow or something, it goes past that, it's going to break this bear flag, and God knows where it's going to go because Apple broke key levels, QQQ broke a key level, so we're going to see. Like I said yesterday, guys, this selling could literally be capitulatory, but I think we're going to see some more green before we see that because the put to call ratio is unbelievable. So like I told you guys, that 37.64, 49 cents. Look at this. Open. Look at the top left again. So this is a yearly chart. I should mention. So each candlestick is literally 1 year, and 37.64 and 61 cents was the open for 2021. If SPY closes the year, so closes tomorrow, which is Friday, 37.64 or below, this is a bearish engulfing candle, which is a huge deal because that's the yearly candle engulfing the entire year previously, which has only happened 5 times in history, and all 5 times were capitulatory. Look at this though. I did, everyone was talking about this on Twitter and whatnot, but I never looked at the RSI of the yearly. Look at this. It's been overbought forever. And guys, I don't know how significant it is on a yearly candle or on the yearly chart, but Jesus Christ. It doesn't get a break. It doesn't even break below this line, even in 74 or the 70s. So, yeah. So, I'm looking at this a little bit concerned. A little bit. Look. It was that high when the Great Depression happened. So, who knows? We'll see. Keep an eye on that. For SPX, what I want you guys to do is tomorrow, see if it breaks below 37.64 even today. But see if it closes tomorrow below 37.64. If it does, that is concerning because that yearly candle will be a bearish engulfing candle. Crude oil, still bullish on it. I don't care that yesterday and today are red because it has to break this red line in order for me to think I was wrong, to be honest. Because, this was a point of support over here, point of support over here, point of resistance over here. So it's a level that it's fighting right now. It's still actually right now it's fighting the 30-day moving average too. But I have a green MACD, I have a long signal on the QQE signals, and I have bullish divergence on the RSI. So until I see this red line break or the 30-day moving average break or even get a red MACD, I am still as bullish as it gets for crude oil. Natural gas, different story. We don't have to get into that. I was definitely wrong about natural gas, though. That's for sure. Dow Jones, guys, look, I always cover SPY. I always cover QQQ and the tech stocks because that's what's fun. That's what's entertaining. But the Dow Jones has not, first of all, it broke above the trend line, and it's been above the trend line for 2 months now. Okay, I want to make that abundantly clear. And it's not, it hasn't, it faked and went below here, but it's still above it. And it's still above the 200-day moving average. Honestly, and I don't know what's going to happen in the new year. Fund managers need to load up on new stocks. I wouldn't be surprised if they load up on tech stocks. We see a bit of green with tech stocks coming into the new year, and the Dow actually suffers because this is unreal. Like, the Dow still has a lot of, like, if I didn't know what SPY and QQQ were doing, I would think the Dow, yeah, it's going down. So, as Dow, short the Dow. You can do that if you want. Do your own research, not financial advice, obviously. But Jesus Christ, man, this unbelievable. It still has a lot of downwards pressure to go, or does it? Because we're gonna look at the put to call ratio, and it's unbelievable. Apple, poor Apple, guys. Apple finally broke that neckline that we were talking about. Okay, so we got red MACD short. This is the thing, though. The RSI is overcooked. So I wouldn't be surprised if we get a bounce up, and it might even just go up. But if I had to guess, it goes up to here, rejects, lets the RSI cool off a bit, and then goes back down. But RSI is not going to matter if this happens. So, look, guys, this yellow line is a head and shoulders pattern. This is still Apple, by the way. And this red line was the neckline of that head and shoulders pattern. That's obviously broken. This red line is the 38.2% retracement level, which is $127.04, as you can see right here. And it's below that. Now, it's not below it enough for me to say confirmation. I want to see a full day below 120, a full candle below 127.04 before I can confirm anything. And if we see that today, if it doesn't go above 127.04, it's not a fake, and it's really below it, then you guys should be concerned, because Apple moves markets. It's in all three indexes. It's the biggest market cap in the stock market. This thing goes down, everything's going down with it, except for Tesla. Tesla went up yesterday because it was extremely oversold, but forget about that. And then, okay, cool. Bonds. What are bonds doing right now? I told you guys to short bonds. Like here. I was like, short TLT, bro. Like, the yields are going up. The bond market's going to go down. But instead of looking at the yields today, we're actually just going to look at TLT. And, okay. So, one of my favorite trading YouTubers, his name is Johnny Bravo, said this is the lowest you're ever going to see TLT probably in your lifetime. It's a bold statement, and he's a smart guy, so I'm not dismissing him. But I will, if I had to bet my top dollar, I'd bet on this gap getting filled. I mean, I don't see anything bullish. We got short signal on QQE. We got RSI still has a lot of room to go down. And we have a red MACD. And it's below the 30-day moving average, below the 9 EMA, and below the 200-day moving average. I see no reason to believe this is going to go up right now. Now, Johnny Bravo did say it's not going to hit this $91.85 level again. Yeah, that's probably true. Who knows, though? It definitely could. We'll see how it acts. I promise you guys, I really believe this gap is going to get filled. Don't forget that I told you to short it at around like $105, okay? So I was right about that. But we'll see what happens with TLT and after it fills up that gap, which I really believe it will. Okay. Guys, yesterday we talked about the put to call ratio is at 1.06. Now it's like 1.2 something. I've looked through our history. It's really hard to tell what it means, because I went back to 08 and I'm like, okay, let's see what the put to call ratio was during capitulation. It wasn't that high, but it was high during the recovery. It's a very inconsistent indicator. So you can look at it two ways, and I'm probably not going to touch on it much more. If I do, it's whatever. But extreme fear, it hasn't been this high all year, guys. So that's a bit weird. So we'll keep an eye on that. But I'm not really sure how important it is. So, yeah, that's about it for the put to call ratio. U.S. economy can... Okay, so guys, you know how, like, my tone completely switches when I get to the news portion, because charts, like, that's us, bro. That's us. It's objective. It's what's happening. And then I get to the news, and it irks me, man. U.S. economy can still have a soft landing. Who is saying this? Actually, I know who's saying it, because I already read it. It's the Biden administration. The Bidenstein. Heading into the new year, the Biden administration believes the U.S. economy can still achieve a soft landing. Guys, if any of you read that, if anyone out there, if your grandma's reading that, if your grandpa's reading that, and they actually believe it, please knock some sense into them. Not only, okay, look, economists see 70% chance of a U.S. recession. Okay, that's cool. It should be like 20% chance of a U.S. recession, and 80% of the economists, or 80%, believe a depression, because there's no chance that there's no recession / depression coming. Something's coming. There's no, if you just look into it, we have a debt-based system, a Ponzi scheme. You guys think some judge or some lawyer said SBF or Sam Bankman-Fried pulled the biggest Ponzi scheme in history? The biggest Ponzi scheme in history is the U.S. economy, okay? We need to continuously borrow more money, print more money, put money into the now so you can worry about it later to pay off the money that we just borrowed. How stupid is that? And then you go to the bank. And you say, oh, I need some money to buy a car. Where do you guys think they get that money from? Do you think they have it? If they're not getting it from the customer funds that the customer trusted them with, which you shouldn't trust them with, they're just making it out of thin air. Digitally, just put it into a screen. How do you guys not understand that this is going to come to an end? Interest rates are going up. The demand for loans are going down. It's either hyperinflationary collapse or a debt implosion. That's all it is. Okay? So this Biden administration, look at the reasoning too. Supporting theories that the large-scale government investments, every government investment is debt. They're borrowing money from the Federal Reserve and creating more inflation. Will help boost the labor markets in the months and years ahead. I thought Jerome Powell wanted the labor market to go down. He literally says that like every speech. We need the labor market to go down. That contradicts itself. It's like a good cop, bad cop type thing. A top advisor to the president told the Financial Times. Those comments are from Heather Boushey. Who the hell is that, bro? Like, oh, this girl, she don't know shit, bro. She's just, they're all actresses. They're all actresses, actors, there to make you think things are going well. They're not. And like I said in the beginning of the video, European stocks mixed in choppy markets, China COVID fears way. Nobody cares about China COVID fears, guys. It's not that deep. Nobody cares. That's not why markets are going down. Markets are going down because technicals are saying it's going down. Look at this shit. As if like, do people really think the people in China are like, holy my god, this is the worst pandemic ever? I can't deal with this shit anymore, bro. I hate news. I might just make this series just charts only now because I can't deal with this anymore. So yeah. Okay, so what are we keeping an eye on today? The Dow. Watch the Dow. Let's see if it breaks this trend line. If it goes to like 32,500 around there, that's breaking the trend line. SPX is huge. Watch for that 37.64 level. We'll go back here. 37.64. If it breaks that, if it closes tomorrow below 37.64, that's big. And crude oil. Keep an eye on crude oil. That's big. It's going to break this red line of 76.40 around there. These are all ranges, guys, not exact numbers, okay? Stay blessed. Keep an eye out. Comment to me what I'm missing. If I'm missing any important charts right now, let me know. I just gave up on looking at the dollar because it's just stuck at 104, and it probably will be for the rest of its existence. That's a joke, but like, wow. What a boring-ass commodity. Anyways, guys, see you. Stay blessed. Love you.